This is our review of the top most popular stocks to buy among analysts right now. I'm Hugh from Wall Street X, and at number 3 we have International Flavors and Fragrances, or IFF. IFF's one-year target for a WSX is 62.47, or a 5.4% decline over today. Analysts seem to think it's going to go all the way up to $94 this time next year, which is a 42.4% increase. We put the risk as medium. We put the reward as low because we have lower earnings estimates for this. We put this one as a sell because it has a low valuation, which is good, but it has mixed earnings growth forecasts, which are mostly very positive among analysts, not for us. They have average debt levels, and they've beat 3 of their last 4 earnings calls, which is a good sign. Revenue is mostly holding, and net income is showing signs of recovery, and most analysts are a moderate buy on this right now. But given it's down $60 from its peak of $156 in 2021, the stock is starting to look pretty good at its current valuation to growth ratio. And while we at WSX are projecting negative earnings growth in the short term, this could be a good long-term hold if you're willing to wait. And many analysts seem to think so. Number 2 on the list is MongoDB, or MDB stock. The WSX 1 year for this is 347.96, or a 7.2% upside, but most analysts seem to think it's going to hit 318.21 next year, which is a negative 2% decrease. We put the risk as medium, we put the reward as medium, we put this one as a hold. It does have a high valuation, pretty high earnings forecast to match though. They have also beat their last 4 earnings calls. They have low debt levels, which is great. The TTM revenue is doing well, and their net income is improving, and most analysts are a strong buy on MDB right now. And overall, a fairly good play given the largely positive earnings forecasts and earnings beats. But when you take a look at their valuation and their earnings projections, it's showing signs of a lot of short-term volatility on the horizon. And you're going to have to hold this one for a little while probably to see any return. Number 1 on the list is Palo Alto Networks, PANW. The WSX 1 year for PANW is 175.4, which is a 9.8% decrease over today. And the analyst 1 year for this is 214.48, or a 10.3% upside. The risk we put is medium, the reward is medium. We put Palo Alto as a buy, although most analysts are a strong buy on this. We're a hold. Most analysts are a strong buy on this. The valuation is very high, but they have those high forecasted earnings to match. They've beat their last 4 earnings calls. They have low debt levels, and their TTM and net revenue are really strong. Overall, decent pick given its current momentum and growth estimates, but given that high valuation, we think it's a pretty fair risk to reward strategy and have rated this a hold for now. And those are going to be the 3 stocks that are popular among analysts right now. If you want to see 3 cheap and good stocks that you can pick up today, go ahead and check out this video right here. Otherwise, be sure to give this video a like, subscribe if you enjoy the content, and I'll see you next video.